In this video, I want to talk about how you can go from $0 to $100,000 over the next 12 months. The first thing you have to do is create your goal. Option 1 is your goal can be to earn $100,000 in a year. Option number 2 is you can build a goal to have a net worth of $100,000. Or option number 3, your goal can be to save $100,000 in the bank to have liquid $100,000 cash. Now, just so we're on the same page, my goal in this video is not to tell you to close your eyes and hopefully this money will manifest. I want to talk about cold hard steps on what you can do to achieve goal number 1, goal number 2, or goal number 3. So let's start with this. How do you actually earn $100,000 in a year over the next 12 months? If your goal is to earn $100,000 in the year 2025, you have to start by breaking it down into smaller bite-sized pieces. There are going to be 365 days in 2025. If you take $100,000 divided by 365, this tells us that you will have to earn $274 a day to generate $100,000 over the course of a year. Now let's break this down a little bit further. How can you actually earn $274 a day? Let me start with the numbers, then I'll go over how you can actually do it. If you can sell a product that makes you $10, you would have to sell 27.4 of those products every single day, including weekends, including holidays. If you sell something that makes you $100 per sale, well, now you only have to sell 2.7 of those things every single day to make your $100,000. Or if you sell something that makes you $1,000, well, now you only have to sell one thing every 4 days in order to generate that $100,000. Now, in order to actually make this happen, you have to know what can you sell. And maybe you have your own business idea, which is great, but let me go over a few ideas to maybe spark some interest. Business idea number 1 is you can become an AI consultant. Every single person is talking about AI, but many businesses have no idea how AI works. So if you're hip with technology, take a couple courses online, watch some videos on it, read some books on it, and if you can become good at AI, you can show businesses how they can save 5 hours of time a week through your AI integrations. And then you can provide the service for businesses, and businesses are wanting to figure out how they can use AI to save costs, to save time, and if you can provide that, they'll be willing to pay you to do that. Number 2, you can create a social media agency that specializes in lead gen. There are a lot of businesses out there. For example, realtors, for example, mortgage bankers, for example, chiropractors who need leads for their businesses. And if you can specialize in one industry, say real estate, and you can show that you can help realtors generate more leads to buy or sell homes through making their social media pages better because you understand how to create content, you understand how to post content, you understand how to go viral, well, now you just created a very lucrative business for yourself. Number 3 is understanding how to do SEO in today's time and then selling the service to businesses, especially local businesses. Because guess what? Every single business wants to be ranked on the first page of Google. But the problem is most people have no idea how to do that. The way you do that is through search engine optimization. That's what SEO is. And now you can come in and you can manage a company's website to help them get on the first page. But the reason why it's so difficult today is because the algorithm has changed because of AI. And if you can show how you understand the new algorithm, how you can rank in this new time and get businesses to rank on Google, to rank on Yelp, to rank on Google Maps, well, now you have a brand new business opportunity that can make you a lot of money if you can find businesses that need the service, and there's a lot of businesses that need the service. Number 4 is you can consider becoming a YouTube ad manager. Again, you can learn by taking classes, by reading books, by watching YouTube videos and reading blogs, how you can manage YouTube ads. And there's a lot of businesses out there that are spending money in advertising that have no idea on how to manage those ads, and they don't have the time to manage those ads, so they're just throwing money in the garbage. And so if you can come in and say, hey, look, you're spending $2,000 a month on your YouTube ads. This money is going into the garbage. How about you let me come in, pay me a little bit of money, and I will optimize these advertisements for you. That way we can actually get a return. Well, now you can help the business make more money, which means they're going to be willing to pay you some more money. By the way, notice that I said YouTube ad manager because I want you to specialize. If you don't want to do YouTube ads, look into Meta ads. If you don't want to do Meta ads, take a look at Twitter ads or X ads. Do something specialized because that's going to help you earn more dollars for the business that you do. And number 5 is you can start a virtual assistant agency where you can find busy CEOs that don't have a full-time executive assistant, and you can now come in and save them time by managing their emails and doing some other basic administrative work for them, kind of like being their personal concierge, and now they will pay you money. These CEOs got money, they don't have the time. You have the time, you don't have the money, so now that's a perfect match because if you can show them that you will save them time, they will pay you money to do that. Now I want you to notice one thing here. In each one of these, you're selling a service to a business that has money, but that lacks the time or that lacks the knowledge. So you have to come in with the time and the knowledge, that way you can extract the money from the business. And then it becomes a win-win. The business needs the service, the business doesn't have the time, you provide the knowledge, you provide the time, and in exchange, you make them money, that way you can help them make more money. Now, let's go back to what we were talking about. How do you actually get to this $100,000 a year? Well, if you're charging $1,000 for a service, you're going to have to find a new business every 4 days, which might not seem too difficult, but that can be hard at scale. But now let's take this one step further. How can you really build a business that's going to take you to $100,000 a year, but also give you much more scalable potential? And one of the ways that you can do this now is, instead of just selling a business a one-time service, create an agency where now you're putting these businesses on a subscription model. For example, instead of charging a business $1,000 one time to do any one of these things, now let's say that you're trying to find businesses that will pay you $1,000 a month to do their virtual assistant services, or to do their YouTube ad management, or to do their SEO, or to do their social media lead gen, or to do their AI consultants. Why did I pick these 5? Because I have signed up for many services where I've spent more than $1,000 a month for pretty much every single one of these. So I know that this opportunity exists. And so now, if you can go out and find businesses, ideally you want to find a business that's making at least $250,000 a year. Well, now you can start targeting them with these services. And if you can find a business that pays you $1,000 a month, now the game is very different. Now, instead of trying to find a sale every 4 days, what you can work to do now is try to add at least one new business to your subscription service every month. Now, see where I'm going with this. Because that means in the first month, one business is paying you $1,000 a month. Month 2, you sign on another business. Now the first business is paying you $1,000 a month, and the second business is also paying you $1,000 a month. By the end of the year, you'll have 12 businesses that are paying you $1,000 a month each, which is $12,000 a month. Now you might have some churn, so maybe 2 businesses leave, but that still means that you have 10 businesses now that are paying you $1,000 a month. That's $10,000 a month in reoccurring revenue from this new business that you started. And that's when you can start thinking about growing, expanding, hiring, and building even bigger. If you're more of a visual person, here's what I mean. Set a goal to call at least 10 businesses a day. That's 50 businesses a week, and we'll call it 200 businesses a month. This is assuming that you're working 5 days a week. When you're starting your business, you're probably going to be working more than that. But for the outreach, many of these businesses, they're only going to be working Monday through Friday. So make this your starting goal. If you can do more than this, great. But now you have 200 businesses, 200 leads that you're reaching out to a month. If you're reaching out to 200 leads a month, let's assume that 10% of them are actually kind of interested, and you can set up a meeting with 10% of them. That means you only get 20 meetings a month out of the 200 leads that you actually contact every single month. Now, out of these 20 meetings that you generate, I'm going to assume that you are a horrible salesperson. You are a horrible closer. And now you can only close, let's call it 5% of these meetings a month. That is 1 sale a month, 1 close a month at $1,000 a month. And if you can keep that up for a year, well, now you have a $100,000 a year business over the next 12 months. And of course, if starting a business is not for you, that's okay. You can also consider asking your boss for a raise, getting a new job, getting a career change, or trying to get a new certificate. That way you can get a whole new job in a whole new industry. So now that we've finished idea number 1, let's talk about how you can achieve goal number 2, achieving a net worth of $100,000. Now this is more along the lines of investing. And this is where I want to also remind you that on January 7th, 2025, I'm hosting a free live and virtual investing workshop, wealth building workshop, where I'm going to be going over how you can build wealth in 2025 in this new and changing economy, because 2025 is going to be a very unique year. I'm going to be going over how do you start investing your money, how do you put money aside to invest, how do you find unique investment opportunities in 2025, and how do you research those investment opportunities. It's completely free. If you'd like to join me, I have a morning workshop and an evening workshop. We're doing one at 10:30 in the morning Eastern Standard Time, and then one at 8 p.m. Eastern Standard Time. If you'd like to join, it's completely free. All you have to do is register, because we have a limited number of seats available. So if you'd like to join, I got the link for you to register down in the description below. When somebody talks about your net worth, what that means is you take your assets minus your liabilities, and this gives you what your net worth is. We're gonna do something much simpler formula here where I'm going to talk about how you can grow your investment value, your investment portfolio value to over $100,000. Now, when we talk about investing your money, what I mean by that is you're taking your money and you're investing it into assets, things like real estate, things like stocks that are going to hopefully work to grow in value, meaning make you money without you having to go to work to get paid. So you're going to work every single day or you're making money from your business. Now you take some of this money and you are going to throw it into these investments. What are these investments? Stocks and real estate. Now when you do that, the goal is just to keep throwing some money into your investments every week, every 2 weeks, every month. That way you can grow the value of investments because now you're putting your money here, and when the stock market goes up, you make money. When real estate goes up or when your real estate pays you dividends from your cash flow, you make money. That's what I'm talking about here. So let's talk about how you can actually make this happen. And there are two strategies. There's two general fundamental strategies that I want you to understand. Number one is what I like to call an active strategy. And number two is what I like to call a passive strategy. Active investing is not trading. I'm not talking about trading. That's not the game that I play. That's a form of gambling to me. Active investing is now you are looking for individual companies. You are looking for specific niches to invest in for the long term. Maybe you like investing in technology. Maybe you believe in the future of healthcare. Maybe you believe in the future of AI, and you're looking for those stocks or those funds to invest in that are more niche. Passive investing is a set it and forget it system, where now you're investing in a broad basket fund. Maybe you're investing in the S&P 500. That's a group of the 500 largest companies in the stock market. Maybe you're investing in the total stock market. Now, you set it and forget it, meaning you create a system where every week or every 2 weeks or every month, money is automatically pulled out of your checkings account and is automatically invested. You don't touch it, and this continues happening when markets are up, when markets are down, when markets are sideways. You don't touch it. That's passive investing. Now you can figure out what's the right strategy for you. For me, I do a little bit of both. I have a system where every Wednesday cash is pulled out of my checkings account and is passively invested into the stock market. Why Wednesday? Because it's in the middle of the week. There's no secret sauce for this. It's just been doing that for years, and that happens no matter what. If the markets are crashing, I'm still buying. If markets are going up, I'm still buying. When it's snowing outside, I'm still buying. For my active investing strategy, I'm investing in real estate, which means I'm looking for individual properties to purchase. And I'm also investing my money into stocks actively. I'm looking for specific companies or more niche things to be invested in, where I'm doing my research to find those types of investments. Now again, this type of active investing comes with more risk, but it also comes with more potential return. And this is where you have to remember, investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point, which is why you need to always do your own due diligence and never blindly trust a random guy on YouTube. But now you gotta pick the right strategy for you. But notice what I said here, stocks and real estate. Those are the two asset classes outside of starting a business that have built more wealth than anything else in the United States over the last century. Now, there's a lot of newer asset classes that have been popping up. Things like cryptocurrencies, things like NFTs, things like investing in wine, things like investing in art. These things are more newer, more speculative. Yeah, I get it, art has been around for many centuries, but these are more speculative. And this is where I want you to understand that there's a difference between making a speculative investment and making a non-speculative investment. You can get extremely rich very fast with a speculative investment, but you can lose all of that money just as fast. So if you're making speculative investments, fine, but just understand that it's speculative. That's why for me, when I talk about how do I create an investment portfolio, there's a piece of my investment portfolio that's made for speculative investments. If you're just starting off, you probably don't want more than 10% of your total investment value in speculative assets. As you start to grow your wealth, maybe you can push that up to closer to 20%, but once you go beyond that, well, now you start to take on a lot more risk. And that's what for me, about 80% of my portfolio outside of my business is stocks and real estate. 18% is speculative. That's things like cryptocurrency, that's things like startup businesses, and then 2% is physical gold. Now, how do you actually go about doing this? Let's talk about the numbers now that we understand the way that this works. The stock market as a whole has grown by around 10% a year over the last 100 years. It's actually a little bit more than 10%, but we'll just keep it round at 10% a year. So let's assume that you're just passively putting your money into the stock market, the S&P 500 or the total stock market, through a broad basket index fund or ETF. And so now, if you can assume this 10% average return, the question is, what do you need to do to be worth $100,000? Well, let's assume that you're just getting started. You have never invested your money before, and so now you're just putting your money into the S&P 500 ETF, which, by the way, there's multiple of them. One of them is called SPY. This is the ticker symbol for one S&P 500 ETF. Another one is called VOO. As a disclaimer, I am personally invested in VOO. Both of these are giving exposure to the S&P 500 ETF. So, 10% returns a year. If you start investing today with $100 a month, well, now it's going to take you 23 years for your money to compound and grow to that $100,000. If you can invest $500 a month, well, now it will take your money 10 years to compound and grow to that $100,000. And if you can invest $1,000 a month, well, now it's going to take you 6 years for your money to compound and grow to that $100,000. Now you got to remember, markets don't always go up. Markets go up, markets go down, sometimes markets crash, sometimes markets boom. This has been the average over the last 10 years, despite the market crashes, despite the booms. Now, the way that you actually build wealth as an investor is through TRM, time, return, and money. The more time your money has to compound and grow, the wealthier you're going to become, which is why you want to start sooner rather than later. The second is R, return. Return is the interest rate that you're going to get. Return is how fast you can grow your money. Return is how fast you can double your money. Now, of course, you can become an active investor to try to get better returns, but that comes with more risk, which is why I say that most people should be a passive investor. Some of you who are more financial nerds and who really enjoy this stuff, that's when you can consider being an active investor. And then you have M, money, which is how much money you invest. The more money you invest, the more money you're going to make. But this is where you got to remember, it takes time. Your money takes time to compound and grow, because in the beginning, when you have $1,000 in your investment portfolio, a 10% return is $100. Doesn't really mean much. But when you have $100,000 in your investment portfolio, now if you grow by 10%, that's $10,000. It's starting to become more significant. When you have $1 million in your investment portfolio, a 10% return is $100,000. So you can start to see that the same 10% return can mean a lot more dollars as you have more money. And you're not going to start with $1 million, unfortunately. But this is where you got to start. And the sooner you can start, the sooner you can keep throwing more money into your investments, the sooner you're going to get to the $100,000, the sooner you're going to get to that $1 million. And that's when these smaller returns can seem a whole lot bigger, because they come with a whole lot more bigger dollars. Now that you know how you can earn your way to $100,000 and how you can build a net worth of $100,000, let's talk about how you can save your way to $100,000. That way you can have liquid $100,000 cash in your bank account. I'm going to break this up into 5 steps. Step number 1 is open up a high yield savings account. There are a lot of online high yield savings accounts. Make sure it's FDIC insured and that it's a legit bank. But now these are banks that are going to pay you somewhere between 3, 4, close to 5% a year in interest. The reason why isn't so you get rich, but it's so your savings can earn you a little bit of money. So as you're working to save some money, your money that you're saving can give you a little bit of interest as well. Number 2 is you got to build a budget. And by budget, I mean take a look at what's going on with your money. This is what I mean. So here's what I want you to do. At the end of every month or the beginning of the month, you just pick where you want to do this. You're going to create a piece of paper. You're going to create a document. You could use a Google Sheet, doesn't matter. But on the top, you're going to write your income and write all the sources of income you had, your investments, your business, your job, all the income that you made down to the last penny. Below this, you're going to write all of your expenses and organize this. So pull out your credit card statements, your debit card statements, your bank statements, and look at where all of your money went. And then organize it. Where was your food expenses, your grocery expenses, your restaurant expenses, your housing costs, your car expenses, and everything else. These are your expenses. And then you're going to write everything else. Did you give any money to charity? Did you invest money? Did you save money? I'm spelling everything wrong. Did you save money? Now, once you put that here, now you have a picture of what's going on with your money. Once you understand this, you will immediately find ways to cut back, because when you see how much money you were spending at Benihana's, maybe you'll start cutting back on some of these expenses, because now in order for you to save $100,000, that means you got to earn money that you don't spend, and then you take that money and you're going to throw it into your high yield savings account. So start diagramming it out right here. Then you can create a system. Now, one of the simplest rules that you can follow is something like my 75-15-10 plan, which says for every dollar that you earn from here on out, 75 cents is the maximum that you can spend. 15 cents is the minimum that you are investing, and 10 cents is the minimum that you're saving. This way you always put some money aside to save. This way you don't spend all of your money. And this is going to be difficult in the beginning if you're used to spending all of your money. I get it. I get it's hard during a time where inflation is high. I get it. I get it. It's hard when you feel like you're not making enough money to survive. I get it. But if you want to save money, you gotta not spend all of your money. Step number 4, this is one of my favorites because this is so often overlooked, is negotiate your bills lower. So now when you're going through your budget that you put together, what you're gonna see is, number 1, you're spending so much money into Benihanas. You might find a couple subscriptions that you didn't know that you had, but then what you'll realize is you're spending a lot of money on your internet. You're spending a lot of money on your cable. You're spending a lot of money on a bunch of random bills. And the cost of that bill has gone up year after year after year, and you didn't even notice it until you wrote it down. This is where you want to start calling up these utility companies and start asking them to charge you a little bit less money. And if you want to do this the right way, what you do is, number 1, be nice to the customer service agents. And then number 2, call around. See what the competitors are charging. Do they have new introductory offers? And then tell them, I've been with you for 3 years. I've always paid my bill on time. Is there anything that you could do to bring my bill lower? Let them negotiate against themselves. And then once they give you a lower price, you say, I was just shopping around and I just saw that this company, your competitor, has an introductory offer that's $20 cheaper a month. Is there any way that you could match that? I would love to stay, but it's just such a different price that I would have to leave otherwise. This way now you show them that you did your due diligence. You show them that you're a good customer. You show them that you want to stay there, but you just need them to lower your bill. So start negotiating your bills a little bit lower. And then the 5th thing that you can do is sell some of your stuff or downsize some of your stuff. If your car is too much, sell it. If you have a whole bunch of electronics in your house that are just collecting dust, sell them. If you have extra clothes, sell them. Start selling the things that you don't need to turn this dust into cash. That way now you have a little bit of extra cash that you can use to invest or build up your liquid savings. And so there you have it. 3 ways that you can go from $0 to $100,000 over the next 12 months, whether you're working to earn that money, to build that net worth, or to save that money liquid. Now I want to remind you that I have a couple resources for you. If you want to join me on my free wealth building workshop, that's going to be on January 7th. It's free and it's live and it's virtual. If you'd like to join, I have the link for you down in the description. And secondly, if you are an investor and you want to stay up to date on what's happening in the financial markets, my team at Briefs Media publishes a free newsletter called Market Briefs every morning. We publish it 6 times a week. There are hundreds of thousands of investors that read Market Briefs every morning. So if you want to break down what's happening in the markets, you can join Market Briefs for free. I have that link for you down in the description as well. This long-term debt cycle, if it happens every 50 to 100 years, you might only live through one. We've seen how these short-term debt cycle recessions work. We saw it happen with 2008 with the Great Financial Crisis. So the question you're going to naturally have is, where are we on this long-term debt cycle now? Back in 2019, Ray Dalio said that we are very late in this debt cycle. So what does very late mean?